Beginner to professional forex trader. Wagwan people from the Holy Nation, the Macall military from the thing, better known as the Heistmaster of the Heistfxacademy, where you keep it simple, nice and easy, and does not get any much better than whatever you usually do on the academy. So today class gonna be straightforward and full of value and knowledge. And remember, this comes from somebody who just in a few years was living like this. And now I am proud of myself for catching out money out of the market, and I'm able to live as I am at the moment, and I'm not yet there thanks to forex trading and understanding the craft. So whatever I'm saying here makes a lot of sense, and maybe you can be 2 trades, 5 trades, 10 trades away from also being able to change your life completely. Remember, each and every day is a learning day, and time invested in learning a new skill or time invested in the charts is not time wasted. All right, now the way we're going to do it, I'm basically going to break the trade analysis for this week. Remember, this is December. We don't expect a crazy volume in the market because we don't have much volume in the market. So we expect a consolidation market in December. Yeah, but then when the market is sleeping, you can learn a lot of the things so that you can know where to capitalize the market volume to when it is now open. Yeah, so that is why I feel today is the best day to teach the beginner to professional trader masterclass. So in today's class, I'll be incorporating how we usually trade supply and demand, combine it with liquidity in the market, pure just a price action in the market, structure in the market, and everything, making it simple, nice and easy from a basic candlestick to the complex market structure, and nothing better than that. So it can be a longer video, so make sure you pay attention from the beginning up to the end, because time invested in learning something new is not time wasted. So you can be a professional trader, you can be a profitable trader, but maybe I can add on something new that you never knew, and this can also increase your profitability or make now you are trading, you understand your strategy more. Yeah, now because we have done with the title for the day, so does not get any much better than that. So make sure you turn on the notification bell so that you can be notified each and every time we drop some of the amazing videos like this by subscribing, so that the Heist community can also grow. And don't be afraid to also share our good videos to your friends who are also in the same field. All right, panditsing. Now straight to the chart. Today we'll be only analyzing pound USD, rather, or mostly known as GBP USD. Remember, this pair and Euro USD, they almost move alike. Yeah, so the same way as maybe Nasdaq and SP 500, they move alike. Yeah, so you can use the divergence of this and this to capitalize on the other one. Yeah, so whenever, and the reason why I'm using this one to demonstrate it, because Euro USD is the highly traded pair in the forex market. So a lot of traders, maybe you're a beginner trader, a professional trader, most of them people usually trade this pair. So that is why this is the most and the correct and the accurate pair for this particular kind of topic. Yeah, now I'll be breaking the events that occurred for this week from the bigger time frames to the lower time frames, doing the top down analysis, trying to analyze and break down each and everything, how it happened in a live market. Remember, everything that is here, we did it in a live market. So today I'm not going to rub off anything, I'm just going to leave them there and give you my thought behind whatever was happening. Yeah, now we are going to start from the 4-hour. Remember, we can as well start from the daily time frames, but from the 4-hour, I think we can also see it all. Yeah, now just pay attention. We are going to do top down analysis in each and every time frame. We are going to learn something, yeah, from basically pure price action to market structure to liquidity to all those things, to the inducement and the SMT. Gonna be a very interesting video to watch at the end of the day. Now, from the 4-hour in this GBP USD, what can you see? Yeah, now in this GBP USD, whatever you can see here, the market came all the way, the market was dropping all the way, and we came to this my support and resistance zone, and then from there the market had now that shift of structure, and from there whatever we have seen from the 4-hour, the market is now forming like a bullish channel. Yeah, now a bullish channel, I mean when I stretch my trend line from this area here all the way to there, you can see the market is in a bullish channel. Yeah, so most of the trading opportunities we'll be looking for in this week are buying opportunities. Yeah, when the market is buying, you also want to be buying so that you cannot be caught. Yeah, we never like try to cut a falling knife. Yeah, so that is why when the market is bearish, we look for selling opportunities. When the market is bullish, we try to capitalize on the buying opportunities. Yeah, but that does not mean you cannot get a sell opportunity in the market. You definitely can when the market offers that. So that is why we are going to go from the 4-hour to the lower time frames. That is the 1 minute and the 5 minutes. They are the primary drivers of the market, and they show the early interest or the early intentions of the market. So after the inducement, you can be able to get a sell opportunity even if the market is a buying market, or even if the market is a bullish market. Yeah, are we together? Now, nothing much in the 4-hour. Now the 4-hour or the bigger time frames are to guide us on the general trend of the market. You want to know, is this market bullish or bearish? Yeah, now from there we are going to the 1 hour, where now we are going to analyze most over the activities that we did for this week. Yeah, now remember the market bounced all the way from this support and resistance level that we had there, and we had equal highs at that area there, or whatever we usually refers to buy side. And after the market came to that buy side, we had broke of structure all the way upwards. Yeah, now from there, whatever you can see in the market was making higher highs, higher lows, higher highs, higher lows. Yeah, now you can see after breaking that structure from that there, we had this market moving all the way to that area there, making a higher high. We came down a higher low, broke structure again, making a higher high, came down, made equal highs at that area there, and we came, shifted structure there. We broke structure and we respected this fair value gap at this area there. Yeah, so that is where our analysis for the week started. Yeah, from that area there. Yeah, now what makes this area a special area in this market? Remember, as the market is moving, we always say to you the Heistmasters that the market moves by forming the exact things. Yeah, now creates liquidity in the markets, balances the equilibrium, targets liquidity, and okay, 4 things: generates liquidity, targets liquidity, balance the equilibrium, and going to the areas of inefficiency. That is maybe the fair value gap or areas of imbalance. For example, the vacuum blocks when the market is opening. Yeah, now this area here, you can see we had a block there, a fair value gap block, where the market reacted from the 4-hour time frame. Yeah, now those areas in the market can be, that is a bullish fair value gap, meaning after the market comes to that area there, then that is a point of interest, yeah, to take a trade from. Yeah, above the fair value gap there, we had an area of liquidity, and we are going to see that more clearly in the lower time frames. Yeah, okay, now straight to the 5 minutes without wasting much time. Now this was how the market closed on the previous week. Remember, now we want to look for areas in the market on Monday to capitalize on this market, and everything here from Monday to Friday we had them in a live stream on the Heistfxacademy. Yeah, now seeing where the potential areas in this market from the last week, we want first to mark our areas of liquidity in the market, because if you don't see the areas of liquidity in the market, now remember, you are the liquidity in the market. So first we start by identifying areas where the market can target in the course of the week, and the previous week's low is always a key area to target as a point of liquidity in the market. Yeah. Now, this was the London and the New York highs there, and this was the last point of this London and the New York low there. Yeah. Now, I marked that place there. And as the new week was opening, remember the market on the previous week closed as those highs there. Yeah, making like equal highs there, and from the left, that was an area of supply which led to a break of structure all the way to these areas here and taking the Asian lows. Yeah, Asian low liquidity at that area there. This is the exact trade I explained on last week. Yeah. Now, after the market closed at that area there, remember we have already marked this as our low from the previous week. Yeah. What the market did on now the London Open, remember we always trade on a London Open key window and maybe sometimes New York when the market has given us confirmations to take a trade. Yeah. Now, whatever I was seeing at now this New York at this London Open for this particular trade was now at the London manipulations, we usually have the Asian highs and the Asian lows. Yeah. Now, and we always wait for accumulation, manipulation, and then we cut the distribution. Or sometimes after the accumulation, we can capitalize on the manipulation. Yeah. Now, in these Asian ranges is where we always get the accumulation first from. Yeah. Now, the Asian highs are at this area here and the Asian lows are at this particular area here. Yeah. Now, we had a period of consolidation in the market, and whatever we see as London was going to open, we took the Asian highs. Yeah. After taking the Asian highs, the market came all the way down and swept the Asian lows. Whatever I mean by a sweep is whenever we have the market coming to a point of interest, comes, taps it, and leaves a wick, wicks that area. We don't have a body candle close below that area there. Yeah. Now that becomes a sweep or a wipe in that area there, and the market immediately reverses from that area there. Yeah. Now, after the market has already taken the Asian highs and the Asian lows, remember why we are interested in this particular areas is because those are areas of liquidity in the market. Yeah. The previous days, the Asian lows and the Asian highs are areas of liquidity in the market. So that is why we usually target them to be taken out before we can capitalize on a trade. But it is going to get more interesting as you are moving on with the other days. Remember, this was on Monday. We don't expect much of the volume like on Tuesday and in between the markets. Yeah. Now, after there, on the 1 minute, when we go to the 1 minute there, after now the market came to that area there, remember this candlestick swept the liquidity of the previous candlestick, and from there we had that quick reversal from that area there, yeah, with this bullish engulfing candlestick. Yeah. Now, whatever I did to capitalize on this trade was, remember, we can be targeting these areas of supply there from the left because we have supply above those areas. Whatever happens after we have taken the Asian lows or high, we target the next area of interest where the market can be pulled to. Yeah. But then keep in mind we also have a break of structure. We still have not broken structure at this level here at this particular time, but from the left we understand that at this area here we have the low of the previous week, so the market can also be interested to come at that particular area there. Yeah. Now, after a mitigation of this block here, remember we have had accumulation, manipulation all the way there, and now we are looking for that now change of character from the lower time frame so that we can capitalize on that area. After a change of character by this bullish engulfing from the 1 minute, we had a mitigation. After now that mitigation there is where I took this trade and targeted these highs at this particular area there, and the market came, and remember from the left we have this bullish fair, we have this bullish, not a bullish but a bearish fair value gap at that particular area there. You can see it, that particular area there. So after the market tapped in to those areas there, and I was already in decent profits, so I left. Yeah, I exited the market because it was just a few hours to land and coming in. Yeah, now remember, before I left this market, the market had been consolidating in that area for quite a long time. Yeah, and after the market tapped in to this that fair value gap, bearish fair value gap, and below me I know we have the previous week's low, which has not been taken yet by the market. I know the market can either reverse from that area, come and take all these areas here and continue targeting the lower sides before we can come to the extreme supply. So that is why I left here. After leaving this market here, the market came all the way up, reacted to that fair value gap at that area there, and what we see was a quick short down all the way to break structure and to sweep the liquidity of the previous week's low, and the market went on all the way, taking the liquidities from the previous week there, and now tapped in to the 1 hour bullish fair value gap. Yeah, all right. Now this was whatever we had on Monday. Yeah, now coming on and then from there, after now tapping in to this fair value gap on that 1 hour fair value gap, I expected the market to continue now to buy or to give a reaction from that area there. Yeah? Now after a change of character, the market came down all the way. After a change of character, remember we always have that mitigation of those blocks. And after I'd seen the market consolidating in that area there, I capitalized on this buy here, making at around $200 in this particular pair here. Yeah. Now that was it all for Monday. Yeah. Now as we are coming on to Tuesday, this was the exact thing that the market had printed for us to trade. Remember, we have had the external supply, that supply which led to the external break of structure of the previous week's low, and then we have had this area of supply, this internal supply, which led to a break of structure of this internal break of structure. Yeah, now as we are coming into now Tuesday, we mark our external supply at this area there and our internal supply. And remember, when our internal supply fails to be respected by the market, that becomes a smart money trap. Yeah, so that is why at this particular area here I had internal supply into bracket smart money trap. Yeah, and whatever we can see there, London and New York of course came. Yeah, now before London and New York usually have the Asian consolidations or the Asian ranges, so we mark our Asian high and our Asian low. Yeah, now the market on London, we can see on London session the market came and took the Asian highs all the way and came almost to our internal supply. Now remember, the internal supply is our area of interest. If we fail to respect that area, then we target our external supply. But what are the entry confirmations, or what are the activities of this market that is going to tell you that this market is going to respect this internal supply? Remember, in the market you trade what you see and what the market is telling you, not what you're imagining that the market can easily reverse from this area. No, you see on the activities of the market from the lower time frames. Yeah, now whatever we can see after the market came to this internal supply, first we had an SMT. In that area there, we add this SMT there, and which acts as the inducement high. Yeah, we first come to that area, give a reaction, leave a low at that area, and after leaving a low, we come and wick the previous high. Yeah, leaving an area of SMT or a divergence in the market, or whatever you can call an inducement high. Yeah, now after I had seen an inducement high, now I was waiting for the market to break now the previous printed low from the 5 minutes, so that I can confirm a change of structure. Yeah, now after the market came with those volumes and closed at that area there, I took the trade with my stops in that area there and targeted the Asian lows, because we have taken the Asian highs and we now target the Asian lows because there are areas of liquidity in the market. And what the market did all the way came straight to that area there. Yeah, What the market did after coming to that area, it reversed immediately, yeah, leaving equal lows at that area there, yeah. Now, after the market has left equal lows, now that becomes our sell side liquidity, yeah. So that is why at that area there, I marked it as sell side liquidity, because that could be an area of interest in the next day where the market can be interested to come. And above it, we also had equal highs there, yeah. After the market reacted off from that area there, we went all the way up and we have failed to reach the extreme supply there, and we also left equal highs there. Now in this market we have a sell side liquidity and buy side liquidity, yeah. So after the Asian ranges, we want to see where are we targeting. We first take the buy side liquidity and target the sell side liquidity, or we target the sell side liquidity and target and now move to the buy side liquidity, yeah. Now from there is where we see this market in the Asian ranges. As always, this was London open at that area there, and whatever you can see, as London was going to open, we had now the same SMT as here. Remember, we have taken the Asian highs here. Now we target the Asian lows, and below it we have sell side liquidity, and already our buy side has been taken by the inducement high, yeah, by creating that SMT, which is an entry model, yeah. Now after the SMT and the market structure shift, remember we mark our low there. After the low was taken from that area there, the market came and tapped in, but then I entered at this area here after the market broke that area there. Remember, some of the time the market cannot come back to mitigate those areas. It can continue moving down and you miss the opportunity. So I jumped straight into the market, and I was in some losses when the market came all the way, but then I marked this box there because there was a block there where the market wanted to mitigate, and from there we see the market shot down in seconds all the way to take the Asian low and to tap into the sell side liquidity. And after sweeping the sell side liquidity and the Asian lows, the market has no business to continue selling down. Now I closed at this particular area there, closing at some profits, yeah. Now that was on Tuesday. The market, after dealing with the sell side liquidity and the Asian lows, it had no business to continue selling. Remember, the market, how it moves by targeting liquidity. So you keep it simple, nice and easy, yeah. From there, the market shot all the way up to now the external supply there, yeah. Now at this external supply, we also have this market leaving equal highs at that the external supply. We had that high there and we had that high there, yeah? Now that also had as liquidity in the market. Here now we know, after we had a reaction from that area there, now the market is going to target those equal highs for the next day, yeah. Now as Wednesday, I've explained that, and that's now Monday, Tuesday, and that was on Wednesday. Now this was on Thursday, yeah, on Thursday and Friday, yeah. Now remember, we have equal highs at that area there, and we have our New York high at that area there, yeah. So whatever we can see on this Thursday is the market made the Asian highs and the Asian lows as always, and as London was opening, we manipulated and took the Asian highs, yeah. Now the thing that you could do at this particular area is to target our Asian lows, yeah, but then we need to target them when we have an SMT in that particular window that we look to trade on. But at this particular day, whatever you can see is the market went all the way and tapped again to this. After taking this area there, from the left we had an area of interest. We expected to have an SMT, but we never had it here. So that means no trade for that day, yeah. The market went all the way, tapped into that area, reversed all the way, consolidated in that area there. Remember, now we are in our December holidays and we don't have much of the volume. So that is why you can see this London session was consolidating for hours and hours at that particular area. They are not moving as such. And what we left behind was equal lows, which act as area of liquidity in the market. And that is it all. On New York, we see the market went all the way up, took this supply, went all the way up. Remember, if this is your point of interest, whatever you want to look for that in that area is activities which are going to tell you that this structure is going to be respected. Yeah, not because you have marked it as supply, so whenever the market comes to that area you quickly want to sell. No, it can be an area where the price has been attracted to, so that it can take the liquidity in that area there, wake the stops above it, and then react from there. Or can be a run of liquidity. A run of liquidity meaning the market has gotten the momentum to continue pushing up. Yeah, so that is why you need to differentiate between a run of liquidity and a sweep of liquidity. Yeah. Now from there, the market has been consolidating there, and now this was on Friday, where we see our New York, our Asian high and our Asian low. We behind us we have left areas of liquidity where the market can be interested in. Yeah. Now whatever you can see, as London was opening here, we took the Asian highs. Now whatever we were supposed to do in this particular market was not target the Asian lows and these are liquidity areas that we have left behind, that area there and this area here. Yeah, and above it the market came and took that New York highs that I have there. The market consolidated there for quite a long time, and I was like, okay, there's no trade at this particular time. Yeah, but then when we had this market making an SMT at this particular area there, I was interested in taking this trade, and I in fact took that trade there. Yeah, but then we had NFP coming in. Yeah, now after now the market has taken the buy side, we have had an SMT which is an inducement high. Whatever the market's supposed to do from this area here is to shoot all the way down and take this the Asian lows and these areas of liquidity, because that is a clear target of liquidity from that area there. Yeah, but the NFP news events shot all the way up. We see this news event shot all the way up there, and my stop order was not activated, and that candlestick went all the way and swept the profits that I had made for the whole week. Yeah, because I never paid attention to the fundamental part of trading. Yeah, now this one candlestick can make your life better or can make you regret on taking this trade, but then losing is never, you cannot avoid some of the time losing in the market. Yeah, so that was a lesson learned. Yeah, but most of the time fundamentals usually respect the liquidities or respect the market structure. I've never seen fundamentals most of the time going against the market structure. Now where this news event shot all the way to is this areas here. Yeah, now in the 1 hour where this market shot to, from the 1 hour there we had an area of we can call it supply from the left. Yeah, now let me go to the 1 hour and I demonstrate that. Now from the 1 hour where you see the market short to was this area here. Yeah, now that area there we have that internal supply which led to that break of structure and which led to this massive sell opportunity. Yeah, so the market short to that area there, and from there is when now we see it reversing all the way down and going to my take profit after taking me out, and my stop order was not activated and I went on and lost these profits, confirming to me that now it is December holiday chief panditing. You no longer need now to continue struggling or chasing after profits in the market. Whatever you have gained from January to November is enough. Yeah, now whatever you are left doing for these remaining days in this December is creating more content to educate the Heist Masters and putting aside more capital to continue trading on now January, because on December, whatever we can see, the market is not like moving as such. It is a consolidation market, and after we have seen the market is in a consolidation, remember this is true because most of the people working at the banks are also, now we have a lot of people in our holidays. Yeah, even though people working at the banks are at holidays, we don't have like much activities going on in the market. And whatever happens when we're in a consolidation market, the market usually creates fake liquidity areas and targets to sweep or wipe people the retail traders trading. So now don't become a victim of this December holiday, because a lot of people, you can make money in this December holiday, and as well you can lose money in this December holiday, because you even don't expect to capitalize on the bigger swing trades from the 4-hour and the daily swings. Yeah, now that was it all for this week, and reading the market, whatever it has been doing from Monday all the way to Friday. Yeah, now on Monday was a winning day, on Tuesday was a winning day, on Thursday was on Wednesday was a winning day, on Thursday no trade, on a Friday we had a trade, but remember on our key time window we never had that entry model for us. Yeah, so whatever we could do in this market was to stay away, but because we needed to close a week in profit so that we can say, oh my god, this was a profitable week, we ended up losing everything there. Yeah, but it is what it is. We come back in 2025 with more energy and more power to booyaka the thing out of the market. And this has been the Haste Master, and this has been the Heistfx. So if you have gotten value from this video, remember each and every day, don't forget to like, share and subscribe for more notification from this trade. Yeah, each and every day is a learning day. We take this as a lesson, and the next time I'm going back to come to these trades, remember my money has been kept by the market. It is only by working smart that I can receive my money back from the market, not by revenge trading, not by trading, over trading in the market. No, by over trading or by revenge trading, a lot of my money from my pocket will also be kept by the market. Yeah, until when I learn to be disciplined, now the market can surrender back my money to me. All right, we keep it simple, nice and easy. Until next time, my people, panditing, peace out.
One trade. Hey!
I'ma do shit my way.
One shot.
So you can go kick rocks. I'ma stack bricks up, build what I want to make.
Hey!